One thing you need to master in order to become an amazing trader is price action. So what is the second thing that you need to master in order to become an amazing trader? Technical indicators. And that's exactly what we are going to learn in today's video and in the upcoming few videos also. So speaking about our learning journey, in the last many videos, we have learned a lot of things regarding price action trading. Now we are moving ahead into the next stage and we are going to learn about technical indicators. I'm sure when you club technical indicators along with price action, you can definitely become an amazing trader. So hi all, welcome to the 29th class of the complete learning series of stock market investing and trading. As always, I put all these videos into a playlist. The playlist is available here in the I button. Make sure you watch all the videos in the right order and learn really well. Let's all trade together and grow together. So yeah, the whole endeavor, the journey is to become an amazing trader, and to ensure that happens, we are going to start learning about technical indicators. So speaking about the agenda of today's video, it is going to be all about the basics of technical indicators, what technical indicators are, how you can plot technical indicators, what are the different types of technical indicators, and some pro tips regarding how to use technical indicators. So once the foundation is made really nice in today's video, in the coming classes we'll be learning about multiple different technical indicators and how you can use them in order to make profits in trading, right? So yeah, without further ado, let's get right into it. The name is Sharik Shamsuddin. Welcome to Market Feed. So hi all, let me address the elephant in the room before we start learning about technical indicators. See, in today's world, if you start looking into traders groups, you'll see there is a divide between traders. And a lot of people nowadays actually say that technical indicators are bullshit. They actually say that technical indicators are bogus and they don't work, and it is just people on YouTube and a lot of people here and there talking about technical indicators, and you do not need technical indicators to win in trading. That is one large group out there, and they actually say that you only need price action to win in trading. Now, let us be very real here, right? We are here as learners. So let's learn everything is what I'm saying. Say, we learned something in the last video. There are three types of traders out there. One type of traders who only use price action to trade. Second type of traders who only use technical indicators to trade. Yes, there are still traders like that out there. And number three, the third set of traders who use both price action and technical indicators to trade. And as I said, I am such a trader. And there are a lot of good, amazing traders out there. If you observe them, you can see that they are in this third category. They use both price action and technical indicators to trade. So if you ask me, I would say that it is not right to say technical indicators is absolutely bullshit or price action is absolutely bullshit. There are good and bad about everything out there. You cannot be an extremist when it comes to trading, right? You can learn about price action and take good things from it. You can learn about technical indicators and take good things from it. There is no point in not learning at all. So what did we learn about trading so far? We learned that it is all about finding a high probability setup, and after finding a high probability setup, you take a trade based on that. Now, in order to find a high probability setup, you can use some things that you've learned from price action and some things you've learned from technical indicators also. So the whole point is, you as beginners, you as learners should learn everything about technical indicators. You should at least try using them. At least once or twice to get a feel of it. You should try using technical indicators, and eventually you will understand which technical indicator will work for you. You might even reach an eventuality where you might understand that technical indicators do not work for me. Let me not use technical indicators at all. Let me focus only on price action trading. Even that can be an eventuality, but you should reach that eventuality only after learning about technical indicators and then trying them out at least some amount of times so that you have enough sample set so that you can pass a judgment. I hope you get the point. So yeah, Passing judgments are very easy, but as learners, as beginners, you have to go through the journey. You have to try things out yourself. Only then you can reach a decision. I hope the air is super clear now. In that case, let us get into our next phase of learning, which is learning about technical indicators. If things are super clear, mark your attendance in the comment section down below. Let's start learning, right? So yeah, the presentation is all set here. We are going to learn about basics of technical indicators. So very clearly, the first question is, what is a technical indicator? Now, in order to understand what is a technical indicator, let us go back to the basics of what technical analysis is. Let's do that very quickly. Now, we know for a fact that NSE, National Stock Exchange, the exchange itself, they have only two data when it comes to any stock or any security. What are they? Price and volume. Historical price and volume data. Now, technical analysis says that by looking into the historical price and volume data of any security, by intelligently analyzing that data, you can have a guess. You can make a prediction as to what will happen to the price in the coming time. And when you can make such a prediction, you can easily take a trade based on that, right? So that is what technical analysis says. Technical analysis says by doing an intelligent analysis of historical price and volume data of a stock, you can predict its future movement. Now that is what technical analysis is. Now the only question there is, if that is what technical analysis is, what is the catch there? Make an intelligent analysis of the historical data. Now how to make intelligent analysis? Two ways of making intelligent analysis of historical price and volume data. Number one is price action based methods, and number two is technical indicators. Now, price action, we have learned a lot about those in the previous mini videos. If you have not watched them, please make sure that you watch this playlist. All the videos regarding mastering price action trading is in the playlist. Make sure you watch all the videos. Number two, the second way of intelligently analyzing historical price and volume data is called technical indicators. Now, what are they? Technical indicators are mathematical tools or calculations which are derived from historical price and volume. That is, in price action, you just looked into the chart. You looked into candlesticks. You looked into chart patterns. You looked into volume. All of those things, you just looked with your bare eyes, right? You just looked into the chart and then you started making decisions. But when it comes to technical indicators, these are mathematical tools. Right? These are mathematical tools. Some calculations are done using the historical price and volume data, and some deductions are given to you. And based on those, you can kind of predict what can happen in the market and you can start taking trading decisions. Now, I know you might feel this is a bit complicated. That is where, as always, I'm going to give you a simple story example. Now, we have used a lot of cricket examples here, and that too taking Virat Kohli. Now, let us continue that tradition here, right? Now, let us take Virat Kohli as a batter. Now, how can we predict how much runs Virat Kohli can make in the next game? Can you predict it? Somehow, using some mathematical tools or calculations, can you predict how much runs Virat Kohli can make in the next game? You can pause the video, think about a bit and come back to me. You have to use some mathematical tools, okay? I'll give you the answer. The mathematical tool that we use there is called average. Now, we have a lot of data, historical data regarding how Virat Kohli has performed so far. He has probably played hundreds of matches. So we look into how much runs he scored in each match and we calculate the average of Virat Kohli. And let us say Virat Kohli's average is 50 runs. So when Virat Kohli walks out to bat the next time, we can kind of safely, or we can have a high probability guess that in the next match, Virat Kohli can score around 50 runs. Can we do that or not? We are able to do that, right? How are we able to do that? By applying a mathematical calculation over the historical data points that we have. And this is called using a technical indicator. Here, in this case, in this example story that we took, we used a simple technical indicator called average, which is a mathematical tool or a calculation, as simple as that. Now, my point is, if you look into any stock, every stock has a lot of historical price and volume data points. Now, we'll use multiple mathematical tools out there so that it will start talking to us. It will probably start telling that, okay, the stock can probably move up from here or move down from here or consolidate here, or there is going to be high strength in the stock. And there are multiple mathematical tools which are applied to study stocks, and all of these are called technical indicators. Cool? I hope you have a better grasp of the subject now. Now, no worries, we'll move ahead. We'll learn about multiple technical indicators, multiple types of technical indicators in today's class. And in the coming videos, we are going to learn about almost all popular, famous technical indicators. So by that time, you'll all understand what we are talking about here. Clear? Then let's move ahead into the second point, which says that technical indicators help understand which direction the stock or index may move in the future. So that is the second point, and I hope a lot of you knew that already. So yeah, the theory is super clear. You got an example, a story as well. With that, I hope the theory is even more clear. In that case, let's get into some practical side. What is it? How to see technical indicators. We just learned what technical indicator is. Now you have to understand how can you see these studies, right? It is as simple as you can plot them on charts of your broker. You just have to go to your broker's trading terminal. You have to open charts, and on the charts is where you can see technical indicators, the mathematical tools that we are talking about. We'll definitely go there. Before that, you have to understand that with faster internet and modern trading tools, plotting technical indicators is now very easy. Now think about a time where modern trading tools were not available. In those ages, in order to do technical analysis using technical indicators, it was such a difficult task. But in today's age and time, it is the best time to become a trader, is what I believe, because in today's trading terminal, any and every technical indicators that you can think about can be plotted with a single click. It is as simple as that. So you can hide or show indicators according to your trading setup. So everything is plotted on your chart, on your trader's broker's terminal, and that's exactly what we are going to see here. So I come to my broker's terminal. You all know that I use Fires as my broker. So if you still haven't opened an account with Fires, the link to open an account is there in the pinned comment and also in the description. So make sure you open an account with Fires, because all of our learning and most of my live trading sessions, everything happen on Fires as of now. Cool. So yeah, I've come to Fires and I've opened the chart of Reliance here, and I'm looking into 5-minute time interval here, which means that every candle is indicating price movement of Reliance over a period of 5 minutes. Right? We have learned about candlesticks, right? So here we have come. Now we have to plot or see technical indicators. And where can we see them? On the chart itself, right? Now the question is how to plot technical indicators. So you have to come here and see this button here, indicators, right? So you have to click there and a search bar comes up, and now you can search for any technical indicator that you want to see or you want to plot on your chart. We can take two examples. One we have already learned. What is it? Volume, right? I've searched for volume. Volume comes here. I'm clicking on volume. See what happened? On the chart itself, just below it, you can see volume has been plotted. Now, these are volume bars, and you keep your cursor here, and on the top left, you can see in that time, 5-minute time interval, 307,000, which is nearly 3 lakh volume of Reliance was traded. Volume as a technical indicator is plotted here. Now let us plot another technical indicator. I'm coming and clicking here on this FX thing, which is technical indicators. I'm searching for a very famous technical indicator called MACD, right? MACD has come here. I'm clicking on it. See what happened? See, this thing that has come here is called MACD. Now I know this will all look very gibberish to you. You won't understand this, right? Now that's exactly what we'll learn in the coming videos. I'll teach you. By looking at this mathematical calculation and this graphical pictorial representation, I'll teach you how to analyze this and how to make sense of this so that you can kind of understand what can happen to the movement of Reliance in the coming times. Clear? Now we have learned what technical indicator is, and we've also learned how to see them, how to plot them on your broker's terminal. Amazing. Now yeah, let's move ahead and let's understand that there are different types of technical indicators out there. Different types. So let's understand what are the different types of technical indicators. Now, based on different things, there are different types of technical indicators. For example, based on where they are plotted, there are 2 different types of technical indicators. Based on when do they indicate the future possibility of an underlying, there are 2 other different types of technical indicators. And also, depending on what do the technical indicator actually indicate, there are 4 different types of technical indicators. What is that has to be clear here? Based on where they are plotted, when do they indicate, and what do they indicate? There are multiple different types of technical indicators. So let us quickly learn about them and be done with today's class. Cool. First, let us learn about different types of technical indicators based on where they are plotted. The first type here is called overlays. So overlays means technical indicators that are plotted over the price in a chart. For example, moving averages, Bollinger Bands. We'll go to the chart and see, no worries. The second type here is underlays, which means that these are technical indicators plotted under the price in a chart. They are mostly oscillating indicators moving between 0 and 100. You need not focus on that. Example are RSI, stochastic and MACD. So what do you understand? Based on where they are plotted, there are two types of technical indicators. One is called overlays. They are technical indicators on the chart, on the price movement of the chart, and underlays which are plotted below the price movement in the chart. Let us go and see, right? One example we saw for overlays was moving average, right? So let us come here, search for moving averages, right? So we have moving average here. I'm just clicking on that, and you can see moving average being plotted on the chart, on the price movement on the chart. So they are what? Overlays. Now you can see MACD is already plotted here. Is MACD plotted on top of the price movement? No. MACD is plotted below the price movement in a completely separate area here, right? It is in a completely separate area of its own. So they are called underlays. As simple as that. Let's move ahead into the next classification. That is different types of technical indicators based on when do they indicate. The first type there is lagging indicator, and the second type is leading indicator. Now, lagging indicators are technical indicators that give a signal after a trend or reversal has started. They are used for confirming trend or direction. The name itself literally says it, right? Lagging indicator. They indicate the price movement in a lagged manner. That is, only after a trend is formed or a reversal has happened, this indicator would say that. After it has happened, it would say that it has happened. Now you might feel like, hey, after something has happened, if an indicator is saying that it has happened, then what is the relevance of that indicator, right? It is actually very relevant if you look at it. Now examples are moving averages and Bollinger Bands. Now for example, if an uptrend has started in a stock, moving average would actually indicate after the uptrend has started, that it would say that the uptrend has started. Now why is it relevant? It is trend confirmation. Now using price action, you can see that uptrend is starting. Now after the uptrend has started, moving average is confirming that the uptrend has started. It is trend confirmation for you to start a long trade there. So that is why lagging indicators are very relevant. Now if you understand that, you can easily understand what leading indicators are. Leading indicators are technical indicators that give us signal for entry even before the movement has begun. Even before the movement has begun. That is, they are giving an indication in a leading way, even before it has happened. For example, stochastics, RSI and MACD are technical indicators which will tell you an uptrend has started or is about to start even before it has started. Amazing. Now you might feel that, oh, leading indicators are amazing. If you actually learn and master them, you can easily start a trade because you can get to know a trend is about to happen even before it has started, right? So let me say it is not as simple as that. There are a lot of dynamics to actually how it works, and they only give you what? A high probability setup. So always know that before quickly jumping into trades. No worries, we'll learn about each of these individual technical indicators moving ahead. This class is just a basic, so you just learn the basics here about the specifics of each of these technical indicators and how to use them for finding trades. We'll learn in the upcoming classes. No worries at all. Now let's move ahead into the next classification of technical indicators based on what do they indicate. Now the first classification here is trend indicator. Now there are certain technical indicators which indicate the trend the stock is in, primarily used to confirm trend and measure the direction and strength of it. For example, moving averages and MACD are actually trend indicators. They actually indicate that, okay, probably an uptrend can happen from here or a downtrend can happen from here, or if the stock is already in an uptrend, it can even indicate that a trend reversal is happening or can happen. Amazing. So there are certain indicators which indicate the trend of the stock. Clear? Just like that, there are certain indicators which indicate the momentum of a stock. And these are called momentum indicators. For example, one indicator, for example, maybe moving average is kind of indicating that the stock is in an uptrend. Now, just saying a stock is probably in an uptrend is not enough. It could either be a very strong uptrend or maybe a weak uptrend. Now, a strong uptrend means that it is a high momentum uptrend, and a weak uptrend means it's a low momentum uptrend. So, understanding the momentum of trend is also important. Correct? So, indicators like stochastics and RSI kind of tell you or indicate the momentum of the trend the stock is currently in. And they are called momentum indicators. Just like that, there are indicators which tell you the volatility of a stock. right? And these are called volatility indicators. They help in understanding the periods of high and low volatility. Understanding this is also very important in order to become a great trader. Now, examples of volatility indicators are ATR and Bollinger Bands. And finally, coming to the last type of technical indicator that we are learning today is volume indicator. Now, volume indicator is something that we have learned already and we know a lot about, but reading this will give you even more clarity. Volume indicator measures trend strength and confirms it with the help of volume. Now, volume indicator basically gives you the volume in a current time period. Now, looking at that kind of actually confirms the trend and can also talk about the strength of the trend also, right? Now, trends are stronger when volume indicators give confirmation. We've already learned this in price action, I know. So yeah, volume indicator examples are volume chart and OBV. Now again, let me tell this again. In today's video, you learned about what technical indicators are, how to plot them, and different types. You've learned that, okay, there are some technical indicators which can give you an indication even before something happened. Leading indicator. There are technical indicators which will tell something only after it happened. Lagging indicators. There are certain technical indicators which will confirm the momentum of a move. Momentum indicators. No worries, in the coming videos, we'll be learning about specific single technical indicators and how to use them also. So stay tuned is what I would say. So before parting for today, I'll give you some pro tips as I always do, right? So the pro tips in today's video, today's class is there are no perfect indicators. So don't go out in the lookout or search for one perfect, amazing technical indicator which will solve your every problem when it comes to becoming a trader. I've seen people actually selling certain secret technical indicators with which you can amazingly find perfect entry positions and perfect exit positions. And I, as a trader, with all my experience, I feel that there are no perfect indicators. You have to club, as I said in the introduction, you have to take some technical indicators which work for you. You have to take some price action concepts which work for you. You have to club them together, and that is when you'll become an amazing trader. So don't blindly trade with just one or few technical indicators that you think would work. Don't do that, right? Second point is, do not overuse and fill your chart with indicators. Now, by the end of studying about multiple indicators in this masterclass that we're doing, we would learn about maybe 5-6 technical indicators. Do not end up putting all the 6, 7, 8 technical indicators on your chart. What will happen? Your chart would have so many technical indicators so that you wouldn't be even able to see candlesticks, which is the absolute truth, right? So please don't do that. Point number 3 is different indicators might work well for different stocks or indices and might not work for others. Now, this is also very interesting, right? So if you look into, say, a stock like Reliance, a few technical indicators might work really well on Reliance. And if you actually take the same technical indicators and try to work it out, just an example, HDFC Bank, you might see that it's not working as effectively as it was working on Reliance. So know for a fact that, again, there are no perfect indicators. Now let's move ahead into the fourth and the final point here, which kind of touches upon what we talked in the beginning, the elephant in the room, which is indicators will not give you an all truth of the market. Look at classic price action also. Now this point is something very personal, because I have personally felt that going just by technical indicators is not absolutely everything, right? You definitely have to incorporate price action based analysis also, and only then is when I believe that you can become a great trader, because probably that is how I trade, right? My trades, my analysis about the market, about stocks, about Nifty, Bank Nifty, mostly are relied on price action, and I use certain technical indicators. So that is my path to success, and I hope you will also do the same, right? Do not rely entirely on technical indicators. You definitely have to use classic price action based methods as well. So yeah, that is it from my side in today's video. I hope you are getting a good gateway into the world of technical indicators. I hope your foundation is clear. In that case, in the coming classes, we'll learn about multiple technical indicators, the logic behind them, and how to use them in order to find amazing trades or amazing high probability setup, as we always keep saying in our classes here, right? So yeah, if you've liked the video, make sure you hit the like button, share the video with maximum people as possible, jump into the comment section and ask me doubts. I'll make sure that each and every one of your doubts are answered. So yeah, that is it from my side in today's class. As always, let's learn, trade, invest, and grow together. See you in the next class. Bye-bye.